On Monday, we got hit pretty hard from 236 on the SPYs, came up to 234, and then had a hard reversal closing above 235. First intraday reversal we've seen in quite some time with a larger range, almost a 1% range on the day. I think on Tuesday morning we talked about, hey, let's keep an eye out on this. If we start to see some wider ranges and some market reversals, this could be a precursor, an indication that the market is ready for a larger decline. Lo and behold, on Wednesday, after having a clean break to the upside in the morning and getting above 237 and looking really strong, the market reverses hard in the last 2 hours after testing the morning high. And so now the evidence is starting to build. Our job as traders is to come in every day, assess market conditions, set up our trading plays, and trade accordingly. And as part of our routine of assessing market conditions, we make a note when we see something that's a little bit different than what we've seen in the recent past. So what we're trying to determine is if the character of the market is going to change. If the character of the market is going to change, the way that we attack the market in our trading plays and the things that we trade is going to change as well. So yesterday was the second piece of evidence, even stronger than Monday's move. You can see clearly here, this looked like this was a decent range in a reversal. But look at the size of this move from the pre-market low to the opening market high is about $2 there. And then the actual high to the reversal low is $3 if you can count this after hours action. So that's different. This morning, we are about 40-50 cents off the after hours low, maybe even a little lower with the futures overnight. And now we have, clear spots. We know this 235.5, resistance here, resistance the following day. Today, if we're going to bounce a little bit, that's a spot that I'd be looking to really be aggressive with a shorting opportunity. The level before that we want to take a look at is 235. That's the spot that that had supported the prior day, and the first time we came down to it, it held yesterday before bouncing up to about a quarter and coming off about 75 cents. So these are the two spots, here and here. We'll go from that. IWM's a little bit trickier. IWM was showing relative weakness all day versus the SPYs. In the open, I guess it got almost to our spot where we were looking for potential failure into 37.5. Came back down to 36.5. Rolled through, came back up. This was a pretty good short on the retracement. Anytime you have an area that's potential support and you have a hard down move through it, and it came right down to our next level, on the move back up to that level, that's the spot where you look to short. It spiked a little bit above there, about 10 cents above, but then rolled over, took out the low, and went all the way down to 34. So and that's $2.50. So again, you don't have to be the first person in or even the second person in. If you see weakness below potential support, strong momentum, short on the retracement, and you might walk into a multi-dollar move, which is what you saw here. Now we got to step back on the daily on IWM. It's a little bit different than the SPYs. And so we had this multi-month consolidation where we kept on supporting 33.5, 34. We rolled through there recently. Last Monday on the gap down, we actually gapped down all the way to 32.5, but we closed the day right back inside of the multi-month consolidation above 34.5. Yesterday, big down move, although not as big as this is probably all-time biggest down move ever from a couple of weeks ago, but a big down move to 134. And so what we were watching today is, and we've already tested 34 in the pre-market. I put that down as an inflection on the sheet. Holding below, we want to see what happens, 33.80, 33.70. If we get closed below that area, it sets us up for lower prices. And the more time we spend below 34, closes below there, you can kind of go back to January, February, and you can see we never really consolidated below this area. We'd come into this area, you see these wicks here, we'd be bought and we'd get back above 34. Same thing here, even with this huge weakness a couple of weeks ago. We went below that 34 area, but we never really consolidated below. If we start to closed it today down here, and we spend a few days closing in this area, that sets us up for the next down leg. That would be the ideal setup if you were looking for a break to the downside. Similar to how oil broke down a few weeks ago. So not a lot in terms of fresh in-play stuff. EVBY, I thought the numbers were okay. I got hit for a little bit below 37 in the after hours yesterday. I thought it had the potential to work its way back up to 39.40. That's already played itself out a little bit, but I think there's a decent shot we can pick some up a little bit lower prices. So initial reaction, the guidance looked okay to me. Somebody was selling it at 37, didn't make sense. Went down about 20 cents below that and then quickly spiked back up to 39. Rolled over one more time below 38. That's kind of what I was thinking for this morning. We peaked out here at 39.5. If you could pick some up down in this area here, in this 38 to 37.70, that's a pretty good spot. And the reason why I thought it was a good buy based on the guidance is we got to step back and look at this thing from the last couple of years. And they're still making plenty of money. It's not as the growth story it was a few years ago. So during the financial crisis, it actually had rolled down to 20, but trended all the way back up to 70, a little bit of a head and shoulders top from a few years ago. But 80, it's cut in half, but they're still making plenty of money. And the fact that the guidance wasn't that bad, figured it wasn't worth selling that to new, multi-year lows. And you can already see it's down. This is the low since going all the way back down to 7 years ago, 7 years ago. So stabilization of earnings, if we look at more recently in 2016, it broke down below 41.5, and actually recently took out the low of 38.70 here. So if it's holding above this 38.70, this low from last October, and then can get a close above 40, you could be looking at a little bit more upside follow through the days going forward. Fund managers they're not that original. They don't come up with a lot of good ideas. They see a name like this still making plenty of cash, beaten down. They gets above 40, close above 40. It's going to have some more upside. So again, got hit below 37 yesterday. Willing to buy some more on a dip right on the open, below 38, or even close to 38, and sell some into 39.40, hold some for a move to see if it can kind of work its way up here. Obviously, price action dependent once the market gets going today. Next one is AMD. Goldman initiated coverage, stuck an $11 price target on it, reacting a little bit negatively. This one came on our radar a few months ago on the big run up. They happen to also make these graphic chips similar to NVIDIA, which is where all the action is on artificial intelligence, machine learning, which everyone seems to be getting into these days. So here's your Goldman downgrade. Came off, what did I put for support on this? 1340, 1370. So when I put that in earlier this morning, 13.7 first time, then it got below it. I think people are probably looking at the next support. Experienced traders can see the same stuff as me on the chart. So 1340 is probably the next spot. I think the way you look at this is there's going to be some people who sell on the Goldman sell rating, but doesn't mean it can't bounce from these areas that we highlighted on the game plan sheet. And what I was thinking was if it bounced back up to this 14 to 1420, that would be a spot where you would play it to. So basically 1420 to 14 resistance, now 1340 as support. After AMD, AKTX, I added this to the game plan. Recently I'd run up on a fast track drug thing going on. I got a William Blair initiated with a buy today, even after this huge run up from 6 to 12. It's a thinner stock. You can see on the day that it reported that news, it traded, it looks like a few million shares, but normally doesn't. But it's already traded 85,000 shares in the pre-market, so this one might be worth taking a look at as well. If they take some profit right on the open and it drops down to 12.5 to 12.70, that would be the spot I'd look to see if they buy it there. And if they do, perhaps kind of right here. Below that, you're kind of looking at 12. All right, second is technicals. Monsanto. Monsanto didn't really do much yesterday. I did short some at 116. We zoom in on it. You can kind of see right on the open, it spiked above 116, then came off 15.5. The rest of the day, I never got stopped out because there was just somebody was selling it here at 116. Eventually, the market rolled over. So I'm not sure how much of that was the market versus itself. Stop is still in the same place. If you notice today, it gets back up to about 115.60, and there's someone selling it lower. Perhaps then we can get that gap fill back down at the mid 114s. SRPT. This one was bought right on the open. Didn't quite get to our 31.50 potential spot for failure. Got it to a little bit above 31. Then quickly came down. I thought once it below 30.50, if you wanted to short it, you saw the high and then the reversal. That wasn't bad. Again, we talked about it yesterday. It's a tricky stock though. So here's what it did yesterday. When it did reverse though, we had 28.70, I believe, as our support, and it almost got all the way back down to that 28.70. So this morning, that's what I'd be looking at, 28.70 to 29, to see if it supports. On a pop back up, 29.80 to 30 is an area that would be interesting to me. And then finally, NVIDIA. NVIDIA behaved extremely well yesterday versus the kind of the levels we shared in the morning meeting. I think I may have actually read a blog post about this. So we had our day one information. It trended lower, almost got to 100. What we talked about in the morning meeting yesterday was after it bottomed yesterday morning, it popped back up, couldn't get above this 102.30. And so we highlighted on yesterday's game plan sheet, which is archived for your perusal, this 102 to 102.30 area. When they bought it at 100 on the open yesterday, it didn't quite get to 102, failed, did make a higher low, eventually got up to this 102, 102.20, 102.30 area, held below 102, and then the market, I'm sure, held at the end of the day, coming off to 100. But it's so important to understand these prices where stock potentially can fail, either on the support side or the resistance side, because you put on a position there with 15, 20 cents of risk, and if the market actually helps you out, you can walk into a couple of dollars. So same levels as yesterday, nothing different. Sold off quite a bit, and we have our prices we want to watch to see if it moves outside of those prices today. So as I said, market conditions starting to change a little bit. We want to see SPYs came off $2.50 at the end of the day. We want to see how much of a retracement we can get here, and after retracement, if it fails and gets back down below, let's call it 234.5, could potentially get a little bit ugly. And again, when the market's changing, doesn't mean necessarily we had an intraday reversal on Monday. We had an intraday reversal on Wednesday. Tuesday was a quiet day. Maybe we'll get a quiet day today, but we want to have in the back of our minds being prepared for some more weakness in the coming days. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.